I never forget when you told us about Nvidia probably 4 years ago, at least three to 4 years ago. And then the stock just went on to be one of the biggest things ever. And so now Nvidia has climbed to about 8% of the S&P 500, which is the biggest share of any single company. Ooh, give us the details. What does all that mean? What should we?
Well, we can assess the pros and the cons. So on the pro side, it's very liquid. It's a stock that's heavily traded. So if it is that you want to take some options, you want to trade options on Nvidia, it's very easy to build an options position in Nvidia because it's hard to build an options position in a stock that's not liquid. So that's one benefit. So let's say the stock is trading at 150, but the option is $20, $30. You can get exposure to Nvidia at a much cheaper cost by buying the option instead of buying the direct stock. So in investing, you can take direct exposure by buying the stock itself, or indirect exposure either by investing in an index that has the stock in it through an ETF, or you can buy an option, which is an asset that's tied to what is called underlying. It's called a reference asset. So in the US market, this is very common, and that's a possible pro for you. However, the drawback is that with a stock that is trading so richly and has rallied so much in a short space of time, it means that the valuation could be stretched. Now, the earnings has grown significantly and has kept the valuation within range with other tech stocks. It's not significantly out of whack relative to its sector. However, it might be time to take some gains, take some money off the table, and to go in a different direction. Maybe another semiconductor stock might be of interest to an investor who wants to stay exposed to semiconductors, or they might want to go into another sector to diversify the portfolio and bring down the risk. Because the key is, again, to not just look at how well the stock has performed, but to ask yourself, how much runway does the stock still have at its current place? Is it that there's going to be a pullback? I believe that there's going to be a pullback at some point. Investors will start to take gains at some point, and sometimes that can be very ugly. The downside can happen in a short space of time, and there can be big drops, and they can be sudden.
And that's the
Because,
thing. So is
yeah,
it even sustainable, Nvidia's success? Because they're not the only player in the game either. So we've started to see so other players gaining traction in the chip making market.
for sure, and there are other players that are emerging that we might not have even heard about. But what's special about Nvidia is its size. They have a very strong balance sheet with a lot of cash. Even though they have been deploying that cash, Nvidia has become a specialist because they actually don't make the chips. What Nvidia does is design the chips and program them. So let's say the production process has three steps. So step one is to design the chips. Step two is to have the chips manufactured, which is done by Taiwan Semiconductors, and it is sent back for programming, which is stage three. So pretty much Nvidia, this focuses on stage one and stage three. They don't do stage two. And they have done that to manage their profit margins to keep production cheap as opposed to doing them everything themselves. Um, Other opportunities in the semiconductor space include AMD and also Texas Instruments. I've been keeping my eye on Texas Instruments. I'm a Texas Instruments, um, not necessarily an enthusiast, but I've been a fan of theirs, a customer of theirs. I use their products. I've had to use their calculators and electronics. They make robust products. They've been around for a long time. But many persons only know them as calculator manufacturers, but they make chips, which go into the calculators. And they also make chips for weapons. They make chips for defense systems. And
Oh,
that in this geopolitical climate, it's very important to be positioned in companies that can benefit from armed conflict because missiles and other weapon systems require chips, and some of those chips are made by Texas Instruments. So, to bring it back into context around the NVIDIA conversation, it's not that it's time to sell totally, but it may be time to sell partially, take some gains and to move in another direction and to look at other opportunities because of how far Nvidia has come in a short space of time. There could be possible downside, and that downside could be significant and very sudden, like what we saw earlier in the year when the US market was very choppy. That could happen very soon because the larger Nvidia gets relative to the rest of the market means that the market is becoming more and more sensitive to the move in Nvidia. So if Nvidia is now the largest asset on the S&P 500, it means that whatever happens to Nvidia is going to affect the S&P 500 index to a greater and greater extent.
true, true. So
To
a few
do
comments here. Phil says Nvidia has no real competition, not for a long time. And then we have D, who wants to know, would Texas Instruments be considered a sin stock? I guess because of their involvement in war manufacturing.
no, they just make chips. They just make chips. I think defense systems is just one segment for them, but I don't believe that it would be a sin stock. Sin stocks tend to be more entertainment driven or tend to
Alcohol,
be more
tobacco,
juvenile vices. Yeah, for sure.
alcohol, tobacco, gambling, that type of thing.
Right.
Daniel says the US government has given artificial intelligence giants Nvidia and AMD the green light to sell some chips to China in exchange for a 15% cut of the revenue. So there's that development.
Yeah, for sure. That is a major factor, but I'm not worried about earnings growth for Nvidia because Nvidia is, put it this way, it's not as though it's reaching the end of its growth trajectory. It's just entering a different phase of growth, and that new phase of growth that it's entering is not yet at the mature stage because from a macro level, more and more devices are going to need more computing power. So devices that didn't have chips before are going to require chips, and devices that had chips before are going to require chips that are more powerful. And
Right.
many of those chips are going to come from Nvidia. So
Yeah, we see
I'm not worried about any growth
GPT-5 is out now.
for sure.
And Sam Altman says that isn't even the most advanced version that they have. That's just the version they're launching now.
Yes, it's early days yet,
They're
and
very early.
in
It's moving so fast.
in my opinion, the best way to get exposure to AI is through chips. So I believe that investing in Nvidia, I mean, an investor that has it already would have a different assessment to make than an investor that doesn't have it at all. Because just taking that position would be a different assessment than saying, okay, I've held this thing for 5, 6, 7 years. Is it time for me to take some gains and rebalance? So again, it's just a matter of perspective and where you sit, but it's still early days yet for Nvidia. And the question is, do I take exposure directly by buying the stock, or do I buy options, or do I blend it? Do I take most of the exposure through options and then the rest in the stock so that my money can stretch further? Because you might not be able to spread your dollars as far just by buying the stock directly. It might be cheaper for investors to actually look at options as a way of getting exposure. So I'm not saying I'm not giving investment advice. We're just talking
Mhm.
about strategy and possible avenues investors can take if they have that risk tolerance. and after speaking with a licensed financial professional. But again, we're just assessing the different roads that investors can take. But now it's getting a bit risky because of the dominance of it. Um,
Right.
if you hold pretty much, if you buy an ETF, if you buy S&P 500 ETF, you pretty much have Nvidia in your portfolio already. So adding a direct exposure to Nvidia is increasing that by so much more, pretty much. And you don't want the portfolio to be too skewed to any one asset.
Got
So
it.
that's a broader discussion
I
and a
mean,
broader
think of
perspective.
the comparable discussion would be when NCB not too long ago was a huge chunk. It still is. It still is one of the top in terms of weighting on the Jamaica Stock Exchange. But
For
what
sure.
happened when NCB stock price fell dramatically, and
It
because it
brought
was
down the
heavily,
index.
exactly so heavily weighted, it brought down the entire index.
Yeah.
So that's the concern. Understood.